Well, markets are set to close higher as the threat of imminent military action in Syria recedes. We also had a solid reading on US GDP today. Now we're joined by Derek, author of Brendan E. Crine. Derek, in the past we've seen markets fall on positive economic news because it increases the chances of Fed tapering. How would you interpret the reaction today? Is it more based on war talk?
I think it's kind of a little bit of the same. With the increase in GDP, the revised version of GDP, it looks like, there might be, originally it was some pop in the market. We come back here towards the end of the day. One thing though, the volume is significantly lighter today. It's again, light volume day. So we're kind of stuck in this trading range where the S&P, any conviction of a breakout is going to come at around 1665 through that on a closing basis, and maybe for a couple of days trading afterwards for a confirmation. Until we do that, we're going to be in this trading range for a while where, we're going to probably meet some resistance up there, pull back to these levels. Right now, the S&P is trading at 1638. Earlier, we were up as high as 1647. So we had a little bit of pullback here towards the end of the day.
Okay. Look, while we did have a solid GDP reading today, we could hit the debt ceiling in October, and there's going to be ongoing fiscal tightening. To what extent is that going to limit medium-term gains for the market?
Well, that's a good question, and we'll have to see on that. Basically, I think what you want to look for is if there is any tightening and spending in Congress, and how is that going to affect the market, the economy going forward. I think what you can kind of see here is, that's why we'll look at those levels. I think on the intermediate term basis, I think a good support range is in the S&P is about 1620. So if we have some sort of reaction down there where maybe we'll have some more a commitment towards volume, increase in volume as maybe an inflection point or buy area for this consolidation range that we've been in, that could lead to more upward momentum in the stock prices. But again, that 1665 level is an area of resistance where we kind of have to break through that. But again, everything does come from coming out of Washington and decisions made by, about the debt ceiling. It's going to have an impact on prices going forward. And we're all going to be looking at that.
Okay, there's been a bit more deal talk in the market this week as well. Today we had Verizon and Vodafone reducing talks. Do you expect that to pick up a bit more in the second half?
It could happen. In relation to particular stocks, I really can't comment on any particular one stock since I'm a designated market maker on the Florida New York Stock Exchange and just basically monitoring the opening and closing of the prices of those stocks. But with mergers and acquisitions going forward, I guess it has been pretty active, and if markets do continue to rise, and there's some companies out there that are relatively fundamentally priced at a discount, you'll see maybe some players come in and try to scoop their assets up and take over those companies. It could definitely continue that trend, yes.
Okay, there you have it. That was Derek Orth and Jane Searle for The Deal.